Hello and welcome back to this edition of Daily Actives brought to you by Bootleg Macro. I'm Dustin. We are looking at Apple once again, and today I do not like what I see in Apple. And I say that because if you look at the previous 2 days, here on the 1st and the 5th, we are at $189. Now it has red background or red lettering with white background. That means it's 3 standard deviations above its 23-day average. Now, if we are looking at today, we are back with green background with black lettering. That means that we are back 1 standard deviation around its 23-day average. We have just lost being above our 5-day moving average, which is 187. So that's quite concerning that we've lost that. We are still above the 23-day moving average, but we really need to hold 180 over the next few weeks here, most likely, because this moving average of the 23-day moving average has actually been coming down quite a bit. So we need to stay above it so that we can continue to see it kind of flip back up. I don't have a representation of it here on the screen, but you can already tell based on what's going on that we go from 180 like a week ago to 179 back to 180 that it's starting to flip. It's starting to turn. We're starting to go back up, but we need to see that happen. Now, it's quite concerning actually that we saw 81 million shares traded today. And I say that because we don't normally see that many shares traded in Apple, or at least recently. We saw 100 million plus shares traded, and that was back at the beginning of August, and those were not good days either. Today we saw 81 million shares traded, and we were down 3.58%, and it made us flip negative on our 5-day rolling. We're still positive on our 15-day rolling and our 1 month and our 3 month and 6 month, but we are barely positive on our 3 month and our 1 month right now. We are not even 2% rolling positive, so I'm very curious about what we're going to have to do and maintain that. Let's go ahead and look. We're going to have to maintain above 179. Actually, that we'll probably be able to maintain that. But again, it makes it even more critical if you think about 180. 180 is an important level for Apple right now. Now, the nice things that we see in terms of signals, we've got go long in the short term, intermediate term, and longer term. The concern is that we saw that volume spike. We're still positive in terms of seeing bullishness in the short term and intermediate term. We are bearish on the longer term now. So you want to be very conscious and cautious of what might happen here. We do have a rising bull in the rolling sentiment. You can see here in this overall graph, we are back slightly potentially above that 15-day moving average. This is based on the ultra fast sentiment indicator, but the ultra fast is even falling again. Let's go ahead and look at the trading signals here. If we look at the trading signals, what we can see on the bull key 3 is that we have 4 of the bull key 3. We continue to gain those bullish signals, even though Apple's had a very aggressively down day to day. We still have a small bull, which is coming. Let's go ahead and look just at what we have in the chart. I will admit, I do not like this chart. If you look at where we come from and how we moved, essentially from where we were at the beginning of 2023 to when we peaked here in the beginning of August, this profile that we're seeing in terms of how Apple is moving right now, this is a dramatically different trading profile and momentum profile of this stock. Even when we look at the overall, like this is the weekly, this goes all the way back to what, May of 2022 or May of 2020. You can see that we saw a major rise up. We've seen essentially a sideways action. We now have a big move up off of that low in January of 2023. But this move that we saw on April 4th, I don't know what it was. It must have been revenue, earnings, slowing growth. I'm not sure. Things have changed in the way that Apple's performing inside of the stock market. We have to be very conscious of that because now when things change in the most widely held stock in the entire world, things move everywhere else. We're looking at the daily sentiment. We can see that essentially it's been falling ever since it looks like 630 or 7.3 was essentially the peak in bullishness. It's been falling ever since. Just like people say, the market always knows. It doesn't matter if it's not priced in now, it will be priced in, and you'll look back and realize that it's been priced in longer than you realized. And now if we're looking at the daily volume, it's interesting because the volume is essentially anemic, which is weird to say because this thing can consistently hit over 100 million shares traded, which most stocks can't say that. But seeing a big move of 81 million shares above this 15-day moving average of this volume is quite concerning when you think about the price move that we saw. It was down nearly over 3.5%. You see that the trend of the volume is actually quite negative. If we look at the price volatility, it is actually quite positive. So that is exactly why you're getting this type of moves. When the volatility is falling and the correlation is rising, that is going to show you that the price is going to fall and very aggressively. What's interesting is that if we look at the trade range here for Apple, it hit the exact top of the range, 189. It was at 192.13 and it completely fell from that level. It was at 189 when it was pretty much kissing the top of the range, and now it collapses down. The range is very reasonable. I mean, it's only based on the movement of the actual price. It's based on standard deviation. It's based on a certain amount of like look back period, and it's dynamic based on how the market is actually moving and how the volatility is moving. You can tell based on the way that the range here bulged out as the volatility broke out, as opposed to when the volatility was at the same level essentially, but was essentially not moving very much. That's what's important about understanding how the rate of change essentially of how a trade range can develop itself. But I'm very curious if I look at this ultra fast sentiment, what is actually going to happen? Because I think right now what I see is that we're at 47% and we should be rising. We really should be because we've come off of this low at 44%, which was the lowest level on this entire look back period of 9 months. We should at least get to 50%, so we should see some sort of bullishness. But let me know what you think in the comments below. Are you long? Are you short? Do you like it? Do you love it? Is this even a good review? And before you go, subscribe to the New High newsletter. We give you 25 stocks to your inbox every single Sunday between $5 and $20, breaking out to new highs, breaking out to 1 year highs, all time highs. It's a great list to check out on a Sunday. Talk to you soon.